The American office landscape is changing. Once bustling hubs of activity, many office buildings now stand eerily quiet. Across the country, office space values are plummeting. This decline is fueled by a perfect storm of factors. The rise of remote work is a major contributor. Companies are reassessing their need for expensive office space. Economic uncertainty is also playing a role. Businesses are hesitant to commit to long-term leases in uncertain times. The result? A potential crisis in the commercial real estate market. The consequences of this decline are far-reaching. Property owners are facing significant losses. Lenders are bracing for potential defaults on commercial mortgages. Cities that rely heavily on property taxes from office buildings are grappling with budget shortfalls. The future of the office, as we know it, is uncertain. The traditional model of employees commuting to centralized office spaces 5 days a week is being challenged. The COVID-19 pandemic forced companies to embrace remote work. What started as a necessity quickly became the norm for many. Employees discovered the benefits of working from home. Increased flexibility, reduced commute times, and improved work-life balance were major advantages. Employers also recognized the potential benefits. Remote work offered cost savings on office space and increased employee productivity. This shift to remote work has had a seismic impact on the office market. Companies are downsizing their office footprints. Many are adopting hybrid models, allowing employees to split their time between home and the office. The demand for traditional office space has decreased significantly. This decrease in demand has led to the decline in office values. It remains to be seen how this new landscape will evolve in the coming years. Amidst this economic uncertainty, investors are seeking safe havens for their money. Gold, a traditional safe haven asset, has seen a surge in demand. Gold prices have risen steadily in recent months. Investors are drawn to gold's stability in times of economic turbulence. They view it as a hedge against inflation and a store of value. This renewed interest in gold is not limited to institutional investors. Individual investors are also flocking to gold. They are buying gold bars, coins, and exchange-traded funds, or ETFs, backed by gold. This demand for gold is likely to continue as long as economic uncertainty persists. Gold's appeal as a safe haven asset remains strong. Section 4. A silver lining for homeowners. While the decline in the office market is a cause for concern, there may be a silver lining for some. Lower interest rates, implemented to stimulate the economy, could benefit homeowners. Lower rates make it more affordable to refinance existing mortgages. This can result in significant savings for homeowners. Lower rates can also make it more appealing to purchase a home. However, the impact of lower interest rates on the housing market is complex. While lower rates can stimulate demand, other factors are at play. The availability of affordable housing remains a challenge in many areas. The economic uncertainty caused by the office market decline could also make some potential home buyers hesitant. It remains to be seen how these competing forces will play out in the housing market. Section 5. Shifting sands. The economy adapts. The decline in the U.S. office market and the rise in gold's value are symptoms of a larger economic shift. The way we work, where we work, and how we invest are all evolving. The COVID-19 pandemic accelerated these changes. It forced us to rethink traditional models and adapt to a new reality. The future of the economy is uncertain, but one thing is clear: adaptability will be key. Businesses that can embrace new technologies, flexible work arrangements, and innovative solutions will be best positioned to thrive. Individuals who can adapt their skills and embrace lifelong learning will also be well equipped to navigate these changing times. The economy is in a state of flux, and only time will tell what the long-term consequences of these shifts will be.